Hi guys, how are you doing? Welcome back to Nguna Esther. My name is Nguna Esther and I do coach on investing and on taxes. So in my previous video, this is a follow-up video. So in my previous, I think I'm shrubbing quite a lot lately. Anyway, in my previous video, I did coach you guys on what you need to know if you are beginning in the stock market today. Basically, it is just my experience that I have accumulated and how I would go about opening a CDS account, how I would go about selecting a stockbroker, and everything that I just needed to know when I was beginning, and I still, of course, need to know today. Now, in today's video, this is a follow-up video, and I'm giving you how these shares have performed in the NSE Nairobi Stock Exchange. If I bought some of these shares last year, which I did, but if someone bought any of these companies that I will be showing you today last year, a time like this, but now I've used November 29th just to coincide with the end month of November. So for someone who bought shares November 29th, 2024, how much his shares have grown for them, and if they actually did decide to sell yesterday, how much profits they would be making. Profits is capital gains, remember. So that is what I'm going to teach you in this video. And guys, one thing that I've learned is that most of us, I don't know, it's like we expect someone ourselves from the future to just come and buy for us shares, or we expect someone else to come and buy for us shares, or come and invest for us, or just make money for us, guys, not knowing that, you see, the stock millionaires you see today, stock billionaires you see today, they just started the same way you are starting today. That is how they started. So don't expect 57-year-old you to have millions in dividends and millions in shares, but you're not starting today, guys. Don't. It's like most of us, we take it so, what is the word? Yani tuna brush above it. I don't know, I can't remember the word. But we don't, it's like we expect there's another stock market. No, these are the same companies. Just follow the stories of these Kina James Mwangi, Chris Kirubi, and these are just the same shares. It's just the same process, only that they've been there, they've been in the game for a while. Now, I also listened to some podcast, and it was saying if you actually don't own equity, then be prepared to work forever. Equity is either, it can be in your own business, or it can be in other people's business that you own. If you don't own, then just be prepared to work forever and ever. Without much yapping, let me get straight into the video. So the first share is Standard Chartered Kenya Bank, and I'm starting with the lowest percentage return to the highest. And the share price last year was 243. The share price this year is, right, by this year I mean like November, when's today? November 15th, so yesterday, November 14th, 2025 was 303. That is an appreciation of 59 bob per share. So if you bought 50k worth of shares minus transaction fee, everything I will be seeing minus transaction fee, and I hope 50k is so realistic, and you can actually spare this amount this month end. So if you bought shares worth 50k, then you could have made 12k just by owning this multinational bank. The second company is BAT, that is British American Tobacco. It produces tobacco. It's also a multinational company. If you bought last year, the share price last year was 350, and this year it's 450. So that is an appreciation of 100 bob per share. Okay, so based on that purchase price of 350, this is a return of about 29%. So on your 50k, this is 14k as profit. The other thing that BAT investors definitely enjoyed is the dividend of 45 shillings per share last year. So you can see, but I'll be in my next video is where I'll be now mentioning all these companies that really pay good dividends. So let's go on to now company number 3, and this is EABL, East Africa Breweries Limited. Last year's share price was 166. This year is 235. So that is an appreciation of about 69 bob per share. And having invested 50k, that is a profit of about 20,000. 20,000 on 50k. Okay. Let's go to the next company. Equity Group. Last year share price was 45. This year it's 64. So an appreciation of 19 bob per share. And that is a profit of 21,000 on 50k. Stanbic is my next one. The share price last year was 130 and right now it's 195. That is 64 shillings per share. And a profit of 24,000 on an investment of 50k. So, KCB Group. It is also a bank. They've been diversifying a lot in other markets. Congo, Ethiopia. I think it's the Ethiopia one running. I'll confirm. But they are going into other markets. So last year share price was 38. Today it's 65. That is 26 shillings per share. And now you can also see the share price has started, like, it's becoming lesser and more affordable. So that is 26 per share and that is 34,000 shillings on an investment of 50 Gs. The other company is DTB, Diamond Trust Bank. And the share price last year was 172. This year it's 328, so that's 156. Ooh, okay, 156 per share. That's a return of 90.7%. Wow. Okay, so on an investment of 50k, that is 45k, almost double. Next company moving on is NCBA Group. This one, the share price was 43 last year and today it's trading at 83 shillings. Okay, so that's an appreciation of 39 shillings, which is 92% return. And on an investment of 50k, you have made yourself 46k, almost doubling your money. Let's go to one of the OGs, which is Safaricom. The share price is 15 last year, November 2024. Today it's at 29. So that's 14 increase per share, 93% return. And on your 50k, you have made yourself, if you are a shareholder then, 46,000 about. Jubilee Holdings, share price last year was 54. Share price this year is 116. Okay, so that's 62 bob per share. Wow, 116% return. So on an investment of 50k, you have made yourself 58,000 if you are a shareholder then. The other one is HF Group, Housing Finance. The share price last year was 4 shillings and now these ones are now what we consider penny stocks, like share price moja, it's even more affordable than a pen. So the share price last year was 4 shillings and today it's 10 shillings about. So that is 6 appreciation per share, 161%. And you can see how penny stocks have that, they have that magic. You can buy so many of them and you multiply, it's compounding literally. So the percentage return is 161%. Woo. Okay. So with an investment of 50k, you have, wait, which one is this? HF. Yeah, you have 80,000, which has doubled your capital. The other one is KenGen. The share price was 3 bob last year, November end month, and today it's 10 shillings. So that is also about 6-7 bob per share. That is a return of 200% on your 50,000 investment last year. Ooh, the profits only are 100,000. Wow. Okay, and the final one is KPLC. The share price last year was about 5 shillings and this year about 14 shillings. So that's to 10%. or the share has risen by 9 shillings. Ooh, okay, so with an investment of 50,000 last year, you're getting capital gains if you decide to sell of 105,000. Hey, yeah, that's the least. I've just seen that we're actually in the same economy with people who have shares in KPLC and KenGen. If someone has an investment of 50k, that has tripled. So you can imagine someone who has an investment of 50M or 1M. And we're in the same economy. Okay, so that's the list. And one thing I can tell you for sure, because this is a very good question, is that, so is it a good time to invest? These are historical data. This is last year. So is it a good time to buy these shares? And yes, as long as the fundamentals of a company are intact, it is always a good time to buy shares. And even better if the share price has gone down. If there is like a trough there that you can take advantage of, please take advantage of that. And as long as that the fundamentals of that company are intact. The other thing I have to tell you is that when you see the rate of the CBK rate being cut down so that loans are cheaper, so that banks can lend to businesses at a cheaper rate, then that demand moves from the T-bills and it goes to the stock market. So if you see a CBK rate cut down, the stock market will be thriving. The other thing I can tell you for sure is that, like now KPLC, someone wondering if they should buy KPLC. Yeah, I can definitely tell you that KPLC will continue distributing electricity in Kenya. You know they are a monopoly. KPLC is in that market to stay. Which is the other company here? This bank, Standard Chartered. These are multinationals. Equity, KCB. Oh, these companies are aggressively diversifying. These companies, these banks, you will for sure expect them to continue performing exceptionally. I can see one here, Safaricom. Safaricom, you know that it opened Safaricom Ethiopia, and that one will grow. That market is taking off. It will grow. So, which is the other company I can see here? There's NCBA, Stanbic. There's is it official? A merger or an acquisition of NCBA by Stanbic, but I'm gonna confirm. That's gonna be a mega bank. That will be one big bank. Yeah, as long as the fundamentals of a company are intact, buy the shares of that company. A good time to buy is when there's a drop in the price of that company. Buy more. Sawa. Okay, so thank you so much for watching. Address any questions to my comments or my DMs, and I will see you in my next video. Bye.